Hi friends, in the last video we discussed how to buy and sell shares in the stock market using the Angel Broking app. That video explains the major functions and tabs in the app. If you haven't seen that video, please click on the above I button and watch it now. Today's video will be a continuation of that video. Today we will learn about stop loss orders. So without wasting the time, let us begin. Welcome you to another knowledge enhancing video from Vishlens. One way of making profit in the share market is by purchasing the shares when the price is low and sell them when the price increases. But what if the price of the share did not increase, instead it decreases than our purchased price? Then we lose money, right? The more the price drops, the more we lose. Today's video will explain how to minimize our losses in such situation. It is called stop loss order. We know that there is an option of advanced trade in buy window and in sell window. Click on that option. Now a new window is open. The new window gives you three options to carry out your transaction: normal order, stop loss order, and robo order. In normal order, we select the quantity to buy or sell the shares. Then we enter the price for each shares. Choose your product type and select the validity of your order. Now click on buy or sell button to carry out your transaction. This type of order is called normal order or simple order. The normal order or simple order is what we learned in the last video. Now let's watch and understand the second option in advanced trade called stop loss order. Watch till end of this video so that you will have a balanced trading experience with minimal losses. Before that, there are few important points that I would like to share with you to understand the stock market in better. Suppose last trade price of a share in the market is 100 rupees. There are four types of orders that can be placed in this scenario. A buy order for this share at a price equal or above 100 rupees. Let's say 110 rupees. Second option is that we can also place a buy order for this share at a price equal or below 100 rupees, say 90 rupees. Then we can have a sell order for this share at a price equal or above 100 rupees. Let's say 110 rupees. And lastly, we can also have another sell order for this share at a price equal or below 100 rupees. Let's say 90 rupees. What will happen here? A buy order with a rate above last trade price or market price will execute immediately. Why? Because you are paying the same price or more price than the market price. Thus, seller will be very happy to sell his shares to you. Similarly, a sell order with a price equal or below than the market price will execute immediately, because you are undercutting the market price and giving a discount to the buyers. We should never do this mistake to avoid losses. This is the basic rule of stock market. Buy order should be at market price or lower than the market price, and sell order should be always on the market price or higher than the market price. Now let's see what happens when you place an order. If your order is a market order, then your order executes immediately. What's the market order means? That's right. It's a sell or buy order which you have decided to execute at the current market price. This means you agree to buy or sell your shares at last traded price. But what happens in a limit order? Now you know that in a limit order, we decide the price for our transaction. Means we decided at what price we will buy the shares or at what price we will sell the shares. So once we click on the buy or sell button in a limit order, our order will get now placed in a queue. It won't get executed immediately. Why? Because you are not trading at market price. The order will get executed only when the market price matches with your defined order price. Isn't that right? When you place a limit order, you will also be asked for the validity of your order. This means how long you want your order to wait to match your order price with the market price. You can choose a day or IOC. Day means your order will wait till the market closes on that day to match the price. Your order will be waiting for execution under the order tab. If market price and order price matched any time during that day, then your order will get executed. And if not, your order will get automatically cancelled at the end of that day. The IOC means an immediate or cancel order. Means your order will not wait to match the price and get cancelled immediately after you place the order if your order and market price do not match. Now let us see how do we do a stop loss order. Remember, stop loss can be done for the shares that you have already holding. Suppose you have purchased 10 shares of a company ABC at 150 rupees for each share, spending a total of 1500 rupees. Now you feel that the price may drop to 140, and if the same drop trend continues, then the rate of the shares may fall even to 100 rupees. And you don't expect an increase of the prices in near future. But there is a possibility that if the price did not drop more than 140, then the rate can go up to 200 rupees or 250, and then you can make profit out of it. So you don't want to sell your shares now, and you want to wait and watch if the market price goes beyond 140. And you want to sell your shares only if the price of the shares drops below 140. So you should use stop loss order in this case. This means you want to sell your shares only if the price drops beyond 140. So you need to place a sell order for 139 rupees. If you do a normal sell order of 139, then your order will get executed immediately because the current market price is 150 and you are undercutting and giving a discount to the buyers. So that's where stop loss order become important. In stop loss order, we got a special function called trigger price. Your order will be inactive until the market price matches the trigger price. Remember, trigger price is not the price of your transaction or your selling or your buying. Trigger price is a price at which your order will get activated. So here, trigger price works as a switch to activate your order. Once the market price matches the trigger price, then only your order will get activated and queued up for execution. And once the order price matched with your market price, then the order will get executed. If the market price meets the trigger price but do not meet your order price, then the order get cancelled automatically by the end of the day. In this case, if the market price reaches 139, your stop loss order will get executed and will save you from losing more money. Let us see how to make a stop loss order in Angel Broking app. For that, click on the stop loss tab, enter the quantity and enter the trigger price. Choose the limit and then enter the price at which you would like to execute your trade. Choose a product. Hope by now you know what is the difference between different product types. You may ignore the disclosed quantity always. It is majorly meant for large traders or institutional traders. You can do sell and buy order under the stop loss order. Now you know stop order is placed to limit the loss and execute an order at the desired price after triggering the order automatically. Hope you understand what a stop loss order now. Please use it wisely to protect your losses during trading. In our next video, we will discuss the last and final type of advanced trade, which is robo order or bracket order. Thank you so much for all your support. Please continue to watch all our trading videos which will help you to be a professional trader. Please don't forget to subscribe the channel and also share this video with your friends and family. Till we meet in the next video, it's Vishnu signing off.